Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Christopher Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
The U.S. dollar, is it on a big rally right now?
Oh, yeah. The dollar, man, it's been on a tear. And you know, if you pull up a chart of several different currencies, you take a look at them, and all the other currencies have just been in free fall mode and selling off for 5, 6, 7 days, pretty much back to back. And the U.S. dollar has been doing the complete opposite. It's been going up and up and up, and it's pushing the upper end of its range. It's had everything is more or less pushed to an extreme level at this point. But that strong dollar has put a lot of pressure on the precious metal sector in general. Typically, they've been moving inverse to each other, so a strong surge in the dollar has definitely put a damper on the precious metals. But considering the move, precious metals are actually still holding up really well in a very strong bullish pattern. It's just they're just under pressure this week, more or less, from the dollar.
Would this be a bad thing for the Canadian dollar?
Well, the Canadian dollar has fallen pretty substantially over the last week and a half. It's usually tied quite a bit to crude oil, but it's kind of bucking that trend with crude oil more or less moving higher while the Canadian dollar has been falling. And, you know, all the currencies have been under quite a bit of pressure. And I think the Canadian dollar will hold up fairly well, I think, going forward a couple of months. But overall, I think when we see the economy start to slow, and we see the equities market start to sell off in a big way, crude oil will most likely sell off, and we'll probably see the Canadian dollar pull back substantially going forward. But right now, you look at the Canadian dollar, and it's actually pulled right back down to a nice support zone that it formed back in March and broke out of in early April. So it's down at support. It's trying to find a support here. The volume's relatively low on it, so it looks like it's going to start to firm up and hold some ground. And a lot of it's going to, you know, hinge back on what the crude oil does. If crude oil finally has a breakout and rally soon, we're going to see the Canadian dollar, you know, probably make back all the gains, the losses that it's had this week.
Do you think the Canadian dollar lost value because of the trouble with the Kinder Morgan pipeline?
It's a possibility. I haven't really followed that story too much, but you know, if you look at the Canadian dollar, you look at the euro, the yen, the pound, you look at all those currencies, they've all been doing the same thing. So I highly doubt it has to do with that specific story. It seems like there's a global trend here with every currency with the same pattern selling off for the last 5-6 days. So there's something a lot larger at play here, and I have a feeling there's a lot of global fear going on, starting to build in the markets, and when the rest of the world gets scared, they usually move to where they think the strongest place to be is, which is the U.S. dollar, and they should migrate into U.S. equities. Obviously, you want to own U.S. equities, especially if the U.S. dollar is going up, because then not only are you catching the rise in stock prices, but you're also seeing that currency go up in value as well. It's a double win for that play. So there's something big at play going on with the currencies right now, and it's going to be interesting to see how long these trends can stay, where the dollar keeps rallying and all these other currencies keep falling. And today might be a turning day. Everything's overextended. You look at the equities market, the NYSE, I like to use the up and down volume, and if you divide them by each other, you can find out if there's panic selling in the market, which this morning at the opening bell, we finally saw some panic selling, meaning there's 3 shares being sold to every 1 share on the New York Stock Exchange. And that means the majority of people are selling shares. And when that's happening on the New York Stock Exchange, which is known as the big board. It's all the big brand name stocks the average Joe trades. So when the average Joe is scared, they sell their stocks. That, to me, is an indicator that the market's trying to bottom. And the VIX spiked up yesterday, spiked up this morning, confirming that there is some fear in the market. And that usually signals that we are very close or putting in a bottom in the market.
We'll have more with Chris Vermeulen right after the break.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's going on with natural gas right now?
Natural gas has been forming a pretty large base, really since February of this year. It had a nice pop early in the year, sold off. We actually took advantage of both sides of that, which was a really nice pop and crash. But now we've been flatlining, and it's been trading under this 280 mark for a while. It's building a very nice base. Actually, it's a similar base to what we've seen in crude oil, except for crude oil's base is multi-years. This is crammed into 2 months. But chart patterns are, they're the same on every time frame. The same pattern means the same thing. Doesn't matter if you're on the 1-minute chart or the monthly chart. It's got a beautiful basing formation, and it's had a nice move up over the last 4 trading sessions. It's pushing on resistance, trying to get through it. And if it breaks, we could see a very nice quick pop in natural gas that could bring it up into the $3 mark or the mid-3s. So I really like natural gas here as a play. And we tend to see natural gas perform well when the markets are scared, when the equities market is scared. It's kind of a weird relationship, but when we see panic selling on the NYSE and we see some fear in the VIX, we tend to find one of the safe havens seems to be natural gas. It seems to kind of always be, if you don't pay attention, you never notice it, but if you focus on it, you'll realize the days when everyone's scared, natural gas is always the one bucking the trend, and it's up 0.5% or 1%, and we're seeing it trade higher again today with a little bit of fear in the market.
And it's something that has to be used, and whether it's for heating or cooling.
Yeah, exactly. It's at historical lows. It's so undervalued, in my opinion. The long-term chart, looking way back to, go back to 2005, it put in a major double top, and then in 2009, 2010, it's been selling down, and it's in a huge bottoming formation. We're talking 8-9 years in the making, and it's still not done, although it does look like it's finally looking like it has some life to it. And when it does rally, I think we're going to see it go back up to that 7-8 mark. But right now we're only at 275. So there's lots of upside potential. But I mean, it's really hard to play natural gas long term, because you can't just buy an ETF that follows it. All the ETFs have terrible contango, meaning even if natural gas doesn't move higher, or even if it moves up just a little bit in your favor, the ETF still loses money over time. So it's really tough to trade natural gas on long-term trades. It's very much so. They call it the widowmaker. It moves extremely fast, and you really have to play it just short term. But I do like natural gas looking forward, a few years from now.
We'll have more with Chris Vermeulen right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Chris Vermeulen. Chris, what's your eye on crude right now?
Well, crude oil's had a really nice breakout. It is in a new bull market, and it's just a little overextended, and more or less expecting it to kind of trade sideways or pull back here for hopefully a week or two, because I'm looking to get involved in crude oil once we do get a pause or a pullback. It's had a really nice couple strong surges to the upside. It's only had a consolidation for a couple days. The pattern, when you step back and look at the bigger pattern, to me, crude oil needs to consolidate a little bit longer, maybe another week, maybe another 2 weeks. If it has the right type of formation, I think it's going to be prime to get in for another major run, because I think the next move up in crude oil will be the $74, $75 per barrel mark. So a pretty nice run from where it is right now at 67. And I like crude oil, but short term, a little bit under pressure here.
Is part of this Saudi Arabia trying to boost the price of oil for their Aramco IPO?
Yeah, I'm not sure. You know, I don't follow the news too much. I must say I'm a 100% technical trader. I could really care less about what the news is, and I find all it does is cloud my judgment. Same with reading and following, other people's analysis. It just gets you to second guess yourself. I like to follow the price, follow kind of my gut experience that I have, and just stick with what I have. Because as soon as you start listening to outside sources, you start to wonder, that's interesting. And it weighs on you, and then you delay, and then the move happens that you expected. And so I have nothing to do with news or, outside analysis really for my work.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim.
My guest has been Chris Vermeulen from thetechnicaltraders.com. You're listening to HowStreet.com radio. If you have any questions for our show or the guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.